Good afternoon, everyone, and welcome to Trading Trends with John Salama, Wednesday, January 14th, 2026. Good to have you. Had a lot of fun yesterday on the morning show. It's Straza and JC. Come out to New York City tomorrow night if you're around. Let's get right into it. There's quite a meaningful drop happening here in the market, but not everything is dropping. You'll see what I mean here in a second. So let's get right into it. Today, like I said, is single stock edition day, so we'll really get into what is moving fast. Trip.com, a big move lower here after it's a Chinese company. They're being probed from regulators there. And Bank of America reported this morning, as did Citi. The market is reacting negatively to both. Big 4+% losses in both of those companies. And Broadcom, they're selling some cloud. They're selling some software and Qs today. We'll take a look at the dashboard panel in a second. And on the upside, they're loving the chemicals, materials type names. Dow, LYB, Infosys, kind of different sector holding there. Those all jumped 6+% or more. And new all-time highs for knows there's not a lot of tech in this group. Walmart, although I guess now since it's in the NASDAQ, a lot of tech funds had to buy it by definition. New all-time high for that name. ExxonMobil. We are going to need them in this energy, need going forward. Obviously, of course, the main bread and butter is oil. And oil is spiking, of course, today with consideration that Trump may, strike Iran. SanDisk, after that spinoff, that company has just been absolutely surging, no stop. Johnson & Johnson, reliable dividends for years and years and years. Folks are going to that. A lot of value plays that are making all-time highs today as they rotate away from tech a little bit. As you see, NASDAQ peaked, clearly Halloween week now. But Bitcoin is getting a bid, by the way. Kinross Gold, they're loving the metals today. I'm in silver, and that thing is surging and holds its gains. It's amazing. Supply and demand, lack of supply there, and massive demand. Going forward, we need the electrification. Newmont, another gold name, making new all-time highs, and Bank of New York, new all-time highs there. Not many financials doing it today. Bank of New York is doing it. They've really used Gemini, and they're trying to wipe off their old guard, getting into the AI front, and investors are appreciating that. All right, let us into the dashboard panel. If you have a ticker or something, put it in, and we'll take a look. There are quite some movers today. All right, let's get into the dashboard panel here. We'll go on a shorter term view. Boop, 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 bop. All right, so we'll get to SPY in a second. It is down 1%. Q's down much more, though, down 1.6%. I'm telling you, that looks like we're moving away from a software to a hardware. I don't want to say economy, but that's at least I was talking about yesterday on the morning show. At least for Q1 or maybe even the first half or more of this year, you had such a rally in the whole tech space last year. Folks are not feeling the love, and they don't want trees to grow to the sky there, so they are selling off Qs quite hard. Notice that IWM up. So this is lifeblood of a bull market, is rotation. They are selling your cap weighted tech here. Nvidia down 2%. Tesla, that's been on a phenomenal run, down almost 3%. Silver, we're just talking about, they're bidding that up through the roof, up 5%. It's crazy. AMD flat, that's impressive. IWM is as I said, up barely. Microsoft down 2%. That is a meaningful move. I was almost going to highlight it for the multiple standard deviation movers. That is significant for Microsoft. A lot of people are looking at Microsoft as OpenAI trade. If OpenAI was listed, would folks be buying puts on them, etc.? And they're playing Microsoft that way. I know some folks wanted to sell puts on Microsoft yesterday, and just continues to go lower. So the software trade is not alive right now. MicroStrategy's up 3% off the back of Bitcoin rallying. Broadcom ugly, down 5%. We're going to look at that chart, I believe. Amazon down 2.25%. Meta down 2.5%. There's just basically, we can't have $5 trillion companies all across the board. That is not what investors are saying here. They're saying, hey, let me buy Europe, let me buy some value, let me buy international, etc. In the de-dollarization play. Intel, amazing, never escaped the White House, right? Up 1.3%, crushing it. Gold, up 75%. You don't use it as much. It's not as an industrial lever like silver. Hence the dispersion there between the returns. Apple down 1.5%, and that is a big move for that. Micron down 1.5%, and Palantir down 1.5%. So they are not feeling the I don't want to say overvalued tech, but the overextended tech that was going crazy in October. It is still technically in drawdowns. Okie dokie. Let's get into the intraday. This is SPY. Here is the opening bell, and boy, so the financials reporting here, and of course they talk about consumer and so on and so forth. JP Morgan already kind of set the backdrop. They had a great, quarter. They basically make $150 million a day, I believe. It's not like they're going to go broke anytime soon. But folks were being a little bit concerned, with the interest income and everything else on their balance sheets. Here, as you can see here in the S&P, where we still have NVIDIA, Apple, Microsoft, highly concentrated index. These are not the, the money makers today. So they sold immediately on the open, 9:30 to 10. We went from 691 all the way to the lows just about an hour ago. We went to as low as 686. VWAP here still curling lower. It's at 688, and here we are currently at 687, trying to carve out some constructive moves, but we haven't been above 50 RSI on a short-term basis since yesterday. So they are in a bit of a sell the rip mode. As I zoom out, here is SPY on a 1-year view, 18% year-over-year return. Absolutely, sensational. I still think so. We are going to be tethered to right around the 687 mark. It is your 21-day exponential moving average. I just see the markets kind of holding here, but it's going to sound complicated. I see a bearish distribution phase beginning in SPY over the next 2 weeks, but with a floor of about, to be frank, if things get ugly to about that 675 level, it's going to be corresponding almost with the lows of that December 17th ugly bearish engulfing candle when we were down 1% that day. So I see the lows basically going there. But this market, to me, does not look like it's going under 670 anytime soon. If it does, that will be your entry to buy. That'll be a great risk-reward level to enter, in my opinion. But for right here, I do think the highs are in for SPY. Struck 2 days ago at that 696. Remember, I was telling you, it looks like it makes maybe want to make another move to 699-ish, but just shy of 700. And it looks like the closest we got was 696 for this run. I don't think we have another, move higher like that until... For all-time highs for SPY, I would think personally, just in terms of cycles, I'm seeing that more of a mid-February thing for us to get north of 696. That's what the charts are telling me here, but the index is still in a decent place. I also love the higher lows here. Don't forget, Thanksgiving week, things look really ugly. We're at 652, and then boom, the aforementioned December 17th candle, 671, and then boom, the lows we've gone recently, 10 days ago, right after the start of the year, or 12 days ago, rather, was about 680. And as I said, 696 was the high 2 days ago. So again, to me, the chart's a little bit messy in terms of SPY, but it's still constructive with higher lows. The Qs is what's dragging it down. They're just not bidding up these, high value tech firms to all-time highs. Even the Google, fervor, which was holding it down as they own the internet, as they're capitalizing on Gemini, YouTube, cloud, they're crushing it. They're not making all-time highs every single day. It's just not the market that you're in right now. We've switched from that digital alpha of Q3 that was very representative there all last year, and then it peaked Halloween week, and now we're just in a more of a global hard asset economy. As I was talking about, the all-time highs at the beginning. Yes, Walmart pivoted into being essentially almost like a tech company, but the gold names making all-time highs, Johnson & Johnson, the chemicals we'll look at. These are where the motion of the ocean is rotating to, if you will, right here in terms of capital. So that is it for SPY right here. I'll talk more about the move, in a Friday video, because I said when VXX gets to a certain point, that'll let me know that the run is almost done. And we have a little bit more to go. You see VXX and volatility climbing today. Of course, it is on a little bit of Iran geopolitical tensions, but there is some business model risk in some of these software companies that have been massively into the accrued recurring revenue model, and some of that is being questioned now because the AI agents do a lot of this for free. So you're seeing Adobe under pressure, Figma, ServiceNow, Jira, Atlassian. So there's definitely difficulty in the software space, and AI is customized software to the individual. So these companies are having some software, some business risk here. But that's pretty much it for SPY. Small caps are in a much better place. IWM, which I am long. I'm long silver. I'm long FXI. I'm long some things that, had a decent, 2025 I wouldn't think that's my book right here to start the year, but it is. I'm not, into these high tech names right now. And I almost always want to buy Qs just as it's the GO ETF since inception, averaging almost 30+% a year, but it is not the time right now. All right, let us get to the single stocks. Enough of index stuff. Let us get into it. Let us get to the gainers first, okay? Number one gainer today, Dow. And I'm not talking about the Dow Jones. Look at this. This is what I'm talking about. An awful name all year, okay, is Dow Chemical. Okay, awful. This is a chemical name if you're not familiar. They do, the market cap size on this is 19 billion, almost like a value trap. They do 40 billion in revenue. And look at the chart. So this one can go much higher. This name peaked, if you recall, back here during the crazy, not quite, but it was a little bit after COVID, at $72, okay, in April. And now look where we are, $28. Oh my heavens. They are just starting to wake up to this now. This actually had a close just 6 days ago above a very heavy 200-day moving average for the first time in over a year. And now a big surge. It is overbought for the first time all year. They're loving it. Typically, so, and this is going to look a little bit messy, like we say, technicals are tough with these massive moving single stocks because, so typically, in terms of cycles type work, just making a quick example on this one. So Dow, I would say buy it December 29th. Right around here is where I would say the move had started at $23. We just went from 23 to 28. Typically, I wouldn't want to chase that, although it is a good looking breakout. They have it. Look at this candle right here. That is a massive bullish engulfing. And we are back here to filling this gap from that July earnings report when it dropped 17%. So I think it's natural for us to try and get to that point, $28, which it's at. The next area here that has much traffic is $30-$31 level. I'll say about $31. That coincides with this ceiling that was not able to get above, going back basically from April. We're not been really able to get above $32. So it could have a little bit more to go. Probably a safer trade is once you wait for this 200-day moving average to stabilize. It looks like it's very close. And then that $25.70, which is that level, the 200-day moving average, will serve as your new floor. And it looks like this does want to get to $30. And if we're talking about the move from digital to physical rotation, chemicals is a not the worst spot to be in. And again, this thing's trading, almost basically half in terms of what they trade on revenue. So overbought all time for the first time all year like that. It's a 76, almost 77 RSI. That is Dow. I'm not gonna have a ton of trade suggestions on this, because I don't think you get paid selling the 24 puts. You'd have to look at your option chain for that. But this is also just one last thing. This has been above a 46 RSI, and I know that seems like kind of curve fitting, but this has really been a place for investors to flock into since the week before Thanksgiving when this had a 23 handle. So it has really been basing, and you look at the the 20-day moving average, it's really been doing nothing. Honestly, this has been dead money. It bottomed in August at an ugly $20. Did honestly nothing, just straddled $23 for the longest time, and now you're finally getting a breakaway in Dow. So a big move today, up 5.8%, and they're still buying it. Next, let's get to LYB. That should be a fun one to say. Lyondellbasell Industries NV. Very similar chart, extremely ugly. Heavy 200-day moving average. Look at that. Bullish engulfing, takes over the prior day. Instead of bottoming in August, this one bottomed in November. For those that don't know, and I don't know the exact market cap of this company either, but I know they're in the chemical space. This is a $15 billion company, so very similar market cap. They do very similar revenue as well, $30 billion versus $40 billion for Dow. These guys are, this is an international company. Dow is more, domestic, if you will. But these are a global chemical company. They're in Germany, Mexico, Italy, Poland, France, China, and Japan, the Netherlands. Similar, I don't want to, beat a dead horse for this. The thing is, that's more interesting about this is it's getting very close to the 200 moving average. I feel like it's going to get to Kembe there at 53, and this one a little bit less overbought, 72 versus a 76, so a little bit less exuberance in LYB versus Dow. In terms of, traffic on the chart, this could get to 55, a little one of those meerkats, almost like we had Nat Gas do in December. Nat Gas getting hammered today, by the way. Yeah, this looks like maybe could do a meerkat to this traffic area of about 55. That's almost still nearly 8% higher from here. This is up 6% today, and then before it wants to digest those gains. But again, this one hasn't had a as strong a chart. I'm going based on the higher RSI. This one's a little bit messier. That's about it for LYB. Next, INFY is the ticker. Infosys is the company. This one's kind of a crazy chart. I don't know what the hell happened on December 19th that sent the stock from 19 to 30, but then it settled all the way back here. Today, up 9%. Let's see if there's any trades. ETFs to me are so much better to have information on top-down basis. These guys are consulting. I believe they're out of India, and they reported earnings today and up 9%. This is a $73 billion company on $20 billion revenue. Earnings have, historically for the past year been not so great for this name. So for it to have a good lift today, as far as I'm seeing in the chart, is pretty, decent and constructive. This was overbought when it had that crazy surge on December 19th. Ugly, ridiculous looking candle there that sent it to 30, and it closed that day at 20 versus a view up of 23, and then it sent a downtrend, which is trying to reverse today. To be frank, this one actually looks like let me see something here. This looks like it wants to get to about, I think you're getting some vol expansion. This looks like, to me, you might actually have a trade here. I think this actually goes to about 20 half. I think it's going to get pretty close to where the close was on that crazy day of December 19th. That's what the charts are telling me here. They did send as high as 1945, and they just sold it off a little bit. But it's up 9%, a strong day. For this, I mean, you could sell. I don't really know how much you're going to get paid in this. You could sell the 17 half or the 18 puts. I don't really think they're even liquid or you're going to get paid. But I do think this has a little bit clearer of a chart. The other ones I'm a little bit more concerned about. I don't have high conviction, although the candles look great. If it sounds mixed, it's because it is. But this one, in terms of my target, I'm just looking at the chart, even before today's massive candle up 9%. This one, to me, I have a target of about, like I said, about 20 quarter is where I'm seeing it. And it's right here where my cursor is, just basically inside. And that will take you back to fill that gap from that February, end of February, from when it was that an earnings report as well? No, it was not, but there's a big gap down, and it had the first oversold reading of the year, which honestly couldn't shake for nearly a month and a half before it got sent to its ultimate lows in October of $16. So a messy chart, but I do think it's trying to carve in a constructive rally. And the 200 moving average actually is just finally starting to go up by a penny a day. So if you're a lazy, slow trader, if you will, you finally almost got that confirmation here. It's now been above the 200 moving average since December 4th, and today it's starting to accelerate. You're above 50 RSI. I do think you get to about 20 quarter, which is $1.10 from here. Still a decent, move. That's more than 5-6%. So some meat on the bone there for Infosys. Okay, that is that. Let's look at the losers because today is a down tape. We'll go to one that is dominating to the downside on the day and the week. Trip.com, it's not that people aren't taking trips, but my goodness, they are being probed. Again, this is a Chinese company. They are, give me some market cap information on this. It's a $49 billion company on $8 billion revenue. So quite a PE multiple here, and probes are never good. I don't like this chart. I'm surprised it actually sliced through the 200 moving average. This thing just peaked. Okay. I'm talking about all-time highs. If you look at a long chart here, this thing was $1 back in 2004. All-time highs, okay, 2 days ago at $79, and boom, just like that, we're nearly oversold. You actually have a 30 RSI. If you saw, it just toggled to 29.8. Which hasn't happened since the United States 52-week low back in April 8th when it was trading $51. They sent it as low as $61 today, and now a little bit of a bump to $63. View up on the day is 65. Life comes at you fast. Get a helmet. For me, this was to me the lower barrier would have been here right around about $68. I really didn't think that rising trend moving average was going to slice. This is a tough one For me, this is a no touch. I don't like the action here. You have a massive bearish engulfing. You're back at the lows from August. I'm really simply just broadcasting this move. This is also the biggest loser on the week. So if you're longtrip.com, apologies, nothing but pain. Things were great going up until Monday, all-time highs, especially, you almost had that double top here. Like, oh, is it going to erase this September high of 78.5? And then it barely squeaked by it to 79, and boom, a massive loss, down 17% today. Let's look at something a little bit more constructive. I would look, again, if you want to buy this name and you say life is about experiences and the market's going from that, people aren't buying washers and dryers and all that kind of thing like they were after COVID. And we went from, hardware type things, products, into services and taking trips and experiences, and you believe in it. I would wait for this a little bit. I would want to see this close above 66.5. And again, probes, I don't know how long it's going to take. You don't know what damning evidence is going to come out in the next couple of days, weeks, etc. So for me, a no touch until I see this hold honestly above 66.5 for a while. It's probably going to take its time to try and fill that gap, going back into that earnings report and then trying to fill its own. So this one for me is a no touch for now. I'm not going to gamble on that because that's what to me it would be. Next, B of A. So a much more solid looking chart. B of A, an amazing looking chart, as many of the financials have been since mid-May. Just a solid place. B of A, not all-time highs. If you recall, that is still back here from the before the great financial crisis, $55. It got so close. Right here. Actually, did I take that out? Hold on a second. Boobity bop. Yeah, it did just barely. So if you look at the COVID or the right before the financial crisis in 2006, we we're at $55, and B of A just this week went to 57.5, and boom, an ugly 5% lower after Moynihan's comments today after reporting their earnings. But financials, are kind of a crazy thing on earnings, and they never beat massively. It's always like in line. They beat it by a little. But to me right here, honestly, this looks like financials are a weird place. I have deployed this new turtle trading system. It basically buys the 1 month high. You sell the 1 month lows and gets you basically in every trend. And then the stop loss on those is a 10-day exit, meaning when you bought the 1 month highs, you exit when it gets a 10-day low. For the shorts that you sold, all the names that were on 1 month lows, you sell when it gets to a 10-day high, if that makes sense. The financials, XLF hit a 20-day low or 1 month low yesterday. But to me, it's almost at the brink. But sometimes you just plug your nose and you still do what the rules are telling you to. And that's what led me to buy silver, even though it was overbought. And, it's my greatest portfolio gainer today and, for the week. So banks are looking like that. To me, B of A looks like an oversold buy here. I like the support it has at, we'll call it just to be cute here, about 50.5. The candle looks ugly, obviously. JP Morgan, they really didn't give any love throughout the day. They just continued to bleed it out. But this chart looks impeccable, just very compelling since mid-May. Looks great. And in terms of RSI, bank has bottomed here pretty much in August, October, and it's looking like right where it is here, the same level as 33 RSI. Only time it's gone below that is when it got oversold. And that happened back in the spring with the whole, tariff nonsense, and actually coincided with a living under the 200 moving average, just a flatline 200 day from here, from March 5th until May 23rd. But if you remember, much of the capital markets globally were in purgatory then as well. So I do like the support here. I am surprised that it went south of 53. So they've really purged it here lower. Ironically, the view up on the day is 53.03. Want to see how this closes later into the day, in the next 2.5 hours. But I do think this etches a decent constructive recovery to about $55 over the next 3-ish weeks. It's not going to be a straight line, but I do think they're going to rotate into these into the financial space. It's definitely going against the grain. It's a bit of a contrarian play here after this bank specifically just peaked just 9 short days ago at 57.5. Everyone's saying finally it's gotten gains. If you held Bank of America since 2008 till today, essentially you were flat, and now you just got up on it, and now you're back down again. But Decent looking chart. Your 200 moving average is at 48 quarter. It's getting pretty close there. If it gets there, I don't think it will. As I said, I also like the higher lows here. I think it'll hold. Just going to be a little bit rough. There are a couple more banks reporting. Citi was another one I was going to highlight here, but they're super correlated. Charts look pretty similar, so I didn't want to highlight both. But Citi's also off similarly. And that's about it. I think Bank of America looks like it's going to be a buy. I personally kind of really like it under $53. Considering it, the only reason why I'm not going to pull the trigger on it is because I had my XLF come up as a short, which I did not execute because it was right on the fringe. So for me, this is a no touch here for the short term. But Bank of America, I do think you're going to probably be okay buying, April 55 calls. Or if you want to do a February 53, 56 call spread, something like that, I think would also be a decent use of capital. Another thing, okay, because they're selling tech, I'll have this as the poster child for today. Broadcom, an ugly day here, down 5.5%. These guys peaked the day before earnings. If you remember, that's when SPY had a resounding high as well. Obviously, we put highs after that, but I remember this was the prior SPY high when Broadcom got to 415. And boom, look at this here, all the way down to 335. This chart has been absolutely amazing since the end of April. And here we are, obviously with a little bit of a down move. What happens next here as semiconductors? SMH hit a 20-day high just the other day. This chart obviously looks heavy. I don't love Broadcom right here. I was a big advocate for it. I don't like the relative strength versus SPY. They are not crowding into it. It doesn't have much power right here. This looks like it has quite a ceiling, honestly, at 370. It just looks like, to me, almost like Bitcoin. I love seeing Bitcoin getting a bid, but for me, the sellers are still in control until it passes 105K. And then, I think FOMO is going to kick in real hard, and then you're going to get the all-time highs very quickly, and people are going to chase it. For me, Broadcom, similar to that ceiling of 105K in Bitcoin, and Bitcoin correlate to software. Broadcom is a semiconductor equipment name. This looks very heavy to me at 370. So until I see it really get above that, where my cursor is here, and those were the highs that they first, this is crazy. Those are the levels first discovered in early to mid-September. I think that, is going to be resistant again here. So don't love what I'm seeing out of Broadcom short term. The chart looks great, longer term. Look at the 200 moving average. But also, we haven't been above a 52 RSI since that day of the all-time high. So it doesn't give me warm fuzzies. I think this has a bearish 2 weeks, to be honest, with a floor of quite possibly 320. And that would coincide, as I said, with that floor here of basically their previous earnings from September. So don't like Broadcom. They're continuing to sell this one. I think this one goes lower. I don't think Broadcom is something that they're going to flock into in the next week or two. Sorry. All right, let's go to the, as we try and wrap up, or well, not quite yet. We still have the gainers. Top 3 gainers of the past 5 days. What has been making money massively? My gosh, they are still going. When we talk about Shield, defense technology, Kratos, I'm not sure if I'm saying that right. Kratos Defense and Security up 32%, okay, over the past 5 days, on average about 6% a day. The candles are getting a little bit smaller. Today it's up 1.8%, but still a great day. New highs today. This thing's been overbought since the whole Venezuela thing on the 7th. And that was a breakout of about from $92. And then again, don't forget that former high back in October was 112, and now we're above that. Just some fundamental or market cap information on this. So these guys in the aerospace and defense, very hot group. This is a $20 billion company. They make $1 billion, so quite a PE multiple on this. This is almost like I said of the chart prior. When things go up like this, I don't personally want to chase it, but this thing's been overbought for quite some time when it gets overbought. Again, September to October was what happened similarly, and then it had quite a drop to the area of the former breakout. I personally wouldn't chase this, but it is the honestly one of the most high riding momentum in a very strong name of defense technology outside the Palantirs, et cetera, which has such a magnification on AI and a little bit of a tech filter. Here you're getting more in the aerospace and defense name, if that makes sense. So for me, I personally wouldn't chase this. Great looking candle, though. Look at this hammer. to 122, and they're still not done. I want to see how it trades into the end of the day. This is the best name out of the past week in the entire market, of the past 5 sessions. Kratos up 32%, a third of the value of the company. I just told you it's a $20 billion company. So adding about $7 billion market cap this week alone. So shout out if you own this name. And honestly, very similar looking chart for Shield, the ETF SHLD, which I'm sure this is a big component of, or at least a component of. And what I mean by that in terms of a strong chart is Shield didn't touch a 200-day moving average all year. The last time this did was February 24th, and that was a gift. It was oversold as well. It was $24. Yes, $24. And we've been multiple baggers for 500% since then. So I would personally wouldn't chase this one here. This looks like it possibly could come down. I don't think as gross as $90 or 50-day moving average. There is a bidding floor underneath this. It's got great relative strength versus SPY, great money flow. Those orders from 3 to 4 o'clock, folks want to get into this. But I personally just wouldn't chase it right here. Something tells me you possibly could get an entry at maybe $100 to $105 after some of this blows over in terms of at least the short term. But right now, this thing can go overbought for weeks. You can buy the breakout, just have a stop loss obviously on it in terms of ATR, maybe two ATRs, and the ATR on this is about $2.80. So I would say maybe a $6 move. Say if you get out 116, something like that, I would say if you just chase it and you bought it today. All right, second biggest mover, and this one this is interesting. Bloom Energy, yes, is not only the second best trade of the week, up 27%. It is the third best trade teaser because I'm doing the best year-over-year trades. This is the third best trade of the year. I love when that happens on multiple time frames. Okay, it's super important because you're going to get a lot of visualization into like anchored VWAP and real relative strength there. So this is a really interesting chart. Bloom Energy peaked on November 10th at $148. I'm rounding for simplicity's sake. Scary thing here, got to 146 yesterday. Fear of the double top, from false moves come fast moves, very fast. You're expecting a drop. Today it is down 4%. If you guys aren't familiar with Bloom Energy, again, top 3 trades on the year. They're in the whole fuel cell power generation game. This is a $33 billion market cap company on $2 billion revenue, so a lofty PE there as well. I would not chase this right here, but it's good to see that it's constructive, and it is a super strong name. This to me does look like a peak. I think this actually, I'm a trend follower. I don't like contrarian calls here. I just told you it's the second best of the week, third best of the year, but I also follow patterns. And while these moving averages are curling higher, I just don't like that rejection here of 146 coming off a double top. That's going to me, instill some fear in traders, algos, filters looking for trades like this. So for me, I think this heads to about 112, right around that area is a point of contention for this stock. It is the 21-day exponential moving average. Again, the 50 days 104. That would be a more drastic collapse or correction. And the 200-day moving average is 60. So we're still more than 2x. I think a little bit too extended. You don't want to see that magically happen like it happened here back at the peak. And then what happened? Boom, drawdown. I think you're going to get something similar. So I want to buy the puts right here on the second best trade of the week and the third best trade of the year. Not necessarily. I will like it from a long setup probably in mid-February, if you do get a visit around that, 105 to 110 handle. But for me right now, it's a no touch. I don't want to just straight out short it. I suppose if you're an absolute, crazy gambler, you could buy the 120 puts. They're going to be expensive though. I obviously don't want to just short the stock outright. So those are the trades if you have to be involved. And like I said, there's no chasing breakout right here as we are having a little bit of a draw down in the short term. Woo! Where were we at? Okay, keeping on going. Boopity boopity boppy. 30. Okay, next is Iren, up 22%. Similar-ish space. Very, very powerful week. Up 4% or so a day on average. Today down 2%, but as you see, not as quite the highs in the rear view like Bloom was the day prior. So similar returns. This has, is technically a software name, is how my broker or how my data provider has it, but they're in the data center electrical infrastructure business. This is a $15 billion company, not a ton of revenue, about $700 million. So really a big PE jump here. I don't like buying it into this area. It doesn't have that kind of fervor in terms of overbought. It hasn't really had any of that type of fervor since the November earnings report. Honestly, when it closed in on $77, which was its high, and here we are at 52. So I don't love chasing this right here. This looks like, to me, this could get to about, honestly, this looks like it has a date with 45 half in the next 2-3 weeks. So again, use a stop loss on this or position size the options for max loss. But I think this could have and again, the volatility is going to be expensive in this. They have these crazy 1x, 2x inverse ETFs too for many, many names. I think they have one on Bloom. I think they have one on Iren. That might be a better way to capture this if you just hold it for 5 to 8 sessions. But I do think this has a date with $45, and that's $7 off. That is quite a move, about 14-ish% if I'm doing the math off the top of my head right. So, and that would be a give back of, much of the move, but not all of it. Like I said, it's up 22% in the past 5 days, 14% drawdown. You still keep some of the skin in the game from an outperforming name. And this name really has broken out since, end of June when it entered this overbought period, which held on for a full month. And then it did again here for 2 months. So that's the call on Iren. All right, I am blathering here. Got stuff to do. Let's go to top 3 losers of the past 5 days. If I already talked about, I'm not going to beat a dead horse here. Trip.com, the biggest loser, down 18%. I'm not going to spend more time. Already talked about it. Second biggest name, though, down this week is Affirm. Affirm down 14%, or an average of 3% a day. It's picking up even more steam, down 5% a day. This thing peaked 2 days ago at 84.65, and boom, a very fast move. Decent looking chart, rising 200-day moving average. Peaked back here at the end of August, but an ugly rejection. Look at that, $100 even. It's almost like the machines knew, said no. It's funny because it's almost perverse when you have a rising market and you get towards that $100 mark. A lot of people say, "Oh, it's psychological. It's going to get to 100 and it's going to go north of that." This thing literally got to 100 even. Some sucker bought it, and boom, very quickly it went lower. Some market cap information on Affirm Holdings, which is a financial services name. So, pairs trade could jump out. If you're like Bank of America, you could sell this. Somewhat correlated, but not exactly, as this is strictly payment network, kind of globally, I believe. They're a $25 billion company on $3.5 billion revenue. They're more in the, consumer-focused apps, merchant solutions, et cetera, et cetera. Don't love this name right here. Looking at the chart, this is your second biggest loser of the week after Trip.com. This looks like it's still going to be in the penalty box for about another 10-ish days or so. Looking at quick cycles here, this looks like it's going to go to the 200 moving average and then probably put a pause there. So $67 is where that is. We're at 72. That's another $5. That's another 6-7%. Not a terrible play. If you are bear, I'm going to look at this a little more closely because I don't have the best feeling about financials, but I think there are some performers that will, do better, like Bank of America. This could be a pairs trade where you buy Bank of America, you sell Affirm tactically, or you do buy call spreads, sell call spreads on Affirm, or buy put spreads on Affirm, sell put spreads on Bank of America. Check the liquidity, option chain, risk reward. You're going to have AI help you do that, I believe, as well, to get into it. But decent looking chart, but I do think what I mean by that is I'm bearish on it for the next week or so to 10 days. It's going to get to that 200-day moving average, I believe 67, and that'll put a floor on it, and then it probably have a somewhat, I don't want to say dead cat bounce, but then it probably has a move towards 76. So that's a big move, 67 to 76. So do a lot of path dependency stuff, and that's what the chart looks like to me in Affirm. And the next one, Datadog, down 13%, or an average of 3% a day. Today, right in line, down 3%. Ugly looking chart, in my opinion here, because we are breaking under the 200 moving average with several times being oversold since Christmas week and not having above a 50 RSI since Thanksgiving. and a peak on November 11th of $202. I don't like that. That does not give me warm fuzzies one bit. So you do have rising 200 moving average. Datadog, for those that don't know, are in the troubled software space. They're selling cloud. This is a cloud application security platform. They are a $44 billion company on $3 billion revenue. Companies with this kind of profile are getting hit. This has had ugly money flow, honestly, since December the 5th. And what I mean by that is those orders, specifically from 3 to 4 o'clock, they have been saying, no, get me the HE double hockey sticks out of this. And the old floor there is 150, and it's not stopping here at 120. What is the next area? Because to be frank, I thought this would have stopped at about 125. Understand that the rising 200 moving average is at 135, and you have a massive convergence of moving averages. The 200-day and the 20-day are at 135. It's also equivalent with the middle Bollinger Band of 135. So for me, it's a little bit surprising that it's gotten this weak. But again, when you're under 50 RSI, you sell first and then you ask questions later. That's why I have just, black and white view of the world, crypto, etc., of sellers being in control. This is a very mixed picture with a downward bias. I think this one will continue to be in the penalty box. To me, the bearish distribution near term started right around here on the 7th. So if you extrapolate and put a 15-day cycle on it, you got roughly 15 days plus 7, the 22nd, about 8 more days of bearishness. I think your floor on this is approaching now. I can't exactly say. I mean, they're still selling it down here. The low is 121. It's at 121. The high is 126 today. So they're not super happy with it. VWAP's 123. We'll see if it recovers over the course of the rest of the day. I don't think it does. And a 26, 27 RSI. Maybe if they really want to sell it off lower, 113. Understand the 52-week low also was from April at $82. So I just gave you the revenue and market cap component. So this could still have a little bit come off. And again, when RSI is this weak and there's very little, it's been above. Yeah, last time, like I said, it's been last time above 45 RSI was the week before Thanksgiving. That is not strength to me. And then after that, like I said, after that low here in the next week or so, if it does get to about that 115 area, you may get a dead cat bounce to that meaningful area of 135. So that's what I think about Datadog there. Top 3 trades of the past 5 days. If you've been long, Kratos, KTOS, Bloom Energy, and Iren, congratulations. You're absolutely killing the stock market. Let's quickly do, because I really went overboard here, the top 3 trades of the past 52 weeks. The number 1 stock, of the past year, and it's a crazy, crazy chart, and yes, there it is, Planet Labs, These guys do launch constellations of satellites to provide data to customers through the U.S., online, and internationally. Makes sense, right? So this is an $8 billion company. They don't make a ton of money, about $300 million in revenue. This is the stock of the year, going back from mid-January of 2025. This name was $3 when SPY hit a 52-week low back in the first week of April. Yes, today it is a $26 name. It is overbought, as it's been for months at a time here. I don't want to chase this here. You got to be careful, where you enter names. The relative strength, though, this has been kicking SPY's butt since June. You wanted to own this versus SPY. Since then, great money flow, too, especially in the last month. You see those bars, really good-looking candles, a massive move there. December 11th, this gained a third of the value of the company in one day alone. This is the stock of the year. It's not the OK Lows. It's not Rigetti Computing, although we will have a computing name soon. It's this. And again, it's a little bit extended, obviously, versus the 200 moving average, which is at $9. We're almost a 3-bagger away from that. And you have this convergence of moving average as well here at 21. I would love that for an entry. I'm not so sure you're going to get it, but that's why I'd rather get into this name. Again, yesterday was the high at 26.60, and today up 2%. This name's up 600% over the past year. Your stock of the year, Planet Labs. Next D-Wave Quantum, there is one quantum name that is still rising to the top, and this is this one, D-Wave Quantum. It's obviously a quantum computing name. $10 billion. They basically don't make any money. They made $25 million in revenue last year. So I think that's less than, a lot of the OnlyFans girls. So be that as it may, it's just kind of range bound. Like this is like kind of recently, I'm saying there's been a lid on it from October at $32 and then a floor essentially at 20. A massive variance for a name like this. Tough to say in the near term. I think this has a little bit of a bullish bias over the next week, but like I said, with that ceiling of $32, nothing really jumping out at me here as I see it living in these bounds. I don't want to absolutely go crazy and sell condors on it. Although you maybe possibly do that on this name until it has a better setup. And again, that's what I mean in terms of having a ceiling on it. This thing, it doesn't get above 62 RSI since the day of its all-time highs back in mid-October. So yes, derivative when you look at technicals on technicals, but that's what I'm looking at here, and it puts a lid on that. I don't like how it has slightly lower high. So there's 32.16. There's a rejection, and then here you see this part kind of giving way. So overall, when I zoom out, yes, amazing strength, but it did peak in October, similar to Bitcoin, which is also brewing here. But I don't think it's going to get taken out, in terms of new highs short term. And then lastly, and that's up 515%, just a hair behind Planet Labs. And then third, as we talked about before, for Bloom Energy, up 514%. Beware of that double top, though. I think this is going lower. So just be careful. Some of the movements in these names year over year. We already talked about, where we see it going. Friday, we'll have an ETF version. Wow, we went overboard today. Come out to New York City tomorrow night if you're out and about.